Good morning, Oracles. So how are Tesla and the market going to trade this week? Well, I'm going to predict, and it's really just a coin flip decision here, I'm going to predict that we're going to be net green at the end of the week. But I'm going to run through a few different scenarios as to how things could potentially play out this week, and looking a little bit further down the road as well. So again, not a crystal ball. I'm not a financial advisor. I'm just taking a shot in the dark here based upon some of the information that I'm bringing forward. So here are my predictions. One, when it comes to Tesla by itself, we're most likely going to see some more green this week. We saw that massive 9% sell-off on Friday due to misleading headlines by Reuters at the beginning of the day, and no one correcting any of this until later in the day when it was too late for anything to turn around anyway. So the discussion with this, and I've been having some discussions with Gary Black, and when I say discussions, I mean I respond to his tweets and he doesn't acknowledge mine because I'm still a little guy. But just in listening to some of his arguments, because others do have the same argument that I do, when it comes down to Tesla, you know, if they had a PR team, that could have been caught early on and said, hey, you know what, this headline is incorrect. This is actually what is transpiring in the company, and they could have fixed it before market opened. My argument on the other side of that, and not to say that's not true because that's totally true, but on the other side is Tesla shouldn't need a PR team to correct blatantly misleading headlines like this. That's something that the SEC should be taking care of. The SEC should be stepping in very similarly to what they did with Elon back in 2018 with his tweet saying that he's going to potentially take Tesla private, funding secured. That was factual statements that he made in a tweet that affected the stock price itself. That was a fact that he has since proven to be a fact. We are now at a point where Reuters put out an article. We saw what the email said. We saw that it was not 10% of the entire staff that was going to get reduced. It was management staff that was getting reduced, and there was going to be an increase in overall headcount. So that is what the email said. So Gary's statement saying, you know, Elon's walking it back. My argument is I don't think it was really him needing to walk it back. If Reuters in the first place put out the information as it was stated in that email, there would have been none of this ever happening at all. So when it comes down to it, is that really a Tesla PR team thing that should be taking care of this? Or is this an SEC thing that should be taking care of this? Seeing as this is something that we have seen in Jim Cramer, an old video from Jim Cramer, saying this is literally exactly what hedge funds do. They will find somebody on the inside, get some information from them, twist it in a manner that is going to sound whatever they want it to sound like, then present it to their buddies that they have in some media outlet and put it out there. This is classic textbook hedge fund manipulation going on from what we saw on Friday. That's exactly it. Jim Cramer has said it himself. This is what hedge funds do. This is what the SEC has said that they are trying to crack down on. Where are they? Why are they not cracking down on this? Tesla wouldn't need a PR team to take care of this if the SEC was doing their job. And now Reuters has updated their article over the weekend to clearly state what is truly meant by this, but at that point the damage is already done. And truly, when it comes down to it, for any long-term investors, this is really just noise, doesn't really make a huge difference. But this is a good reality check for yourself, because if you were emotionally swayed by what happened on Friday and how the stock price moved, this could be a good learning experience for you, just to take a look and say, all right, well, this is how I emotionally reacted to the stock price based on this news, but as a long-term investor, it shouldn't really matter to me. So just a good learning experience. That's just my take on all this. But anyway, getting back to the market and Tesla, sorry for that tangent. Getting back to Tesla and the market. So I believe that we are going to see some green from Tesla because now we have clarity as to what is going on with the stock itself and what's going on with the head count and all of that. And as of the time of this recording, we are up almost 4% to $730 pre-market. My video, if you haven't seen it, I put it out on Friday evening. I will have it in the description below. really puts the headline out there as to what it should have read, which is Tesla reduces payroll to increase production. Because that's really what they did. They're reducing their payroll from management to increase production headcount so that they can have production go higher in the future. So I think we're going to see some green from that news turning around with the stock this week. But on the other side, conversely, we have the macro environment, which has been weighing very heavy on the market this year. And we've got the CPI data coming out on Friday. So again, we always go back to what does the market like the least, and that is uncertainty. We are definitely going to have a lot of uncertainty this week. CPI estimates are around 8%. I will get updated numbers for you guys later on this, but it looks like they're going to be around 8%, which is similar to where we were last month. So we all know that oil prices are still going up. Gas prices are still going up, so we're going to look at core inflation, which does not include energy costs like oil, but as we know, oil does affect a lot of other prices. So with CPI data coming out on Friday, there's going to be this uncertainty in the market leading up to it, which is going to kind of be an up and down roller coaster ride, as it always is. But then when we get the CPI data, that's really what's going to swing us one way or the other. You know, if CPI data comes in lower than expected, we could see, a little bit of a rally in the market. Probably not a lot because we have FOMC coming out on the 15th for next week. But conversely, if we do see CPI coming in higher, then my net green prediction, out the window. Not going to happen because we're going to see the market pull back with anticipation of the Fed going more hawkish. Now, we did get some information from Cathie Wood and her predictions over the weekend. And with inventory levels being so high, a lot of companies are bringing prices down in order to move a lot of this inventory to get it out. And by doing this, that means that they're going to be bringing inflation down. So with all of the prices for everything coming down, Cathie Wood is anticipating that the Fed is going to be flipping their entire view on everything and going significantly more dovish come July. In July, we have the FOMC meeting on July 26th and 27th, which is right in the heart of Q2 earnings season. So if we're starting to see a bunch of Q2 earnings coming out with higher inventory levels, sales are down, leading to a potential GDP negative for another quarter, that could mean recession. So that might mean that the Fed could be flipping their viewpoint and their stance and going more dovish. My prediction was that we were going to see that in September because we were going to be able to get through all of Q2 earnings season, see all of the data that's coming out, and then we are going to be going into midterm elections, and the Fed turning the dime and going a little more dovish at that time takes some pressure off of the entire market between that and midterm elections. That was my prediction. Cathie is calling it in July. So both of us are seeing a U-turn in the Fed going a little more dovish. And we'll see what happens. I mean, if this does end up happening, it's going to be a great sign for growth stocks, and growth stocks will end up going through the roof because growth stocks do well when there's lower interest rates, and as interest rates are going up, they're not going to do well. And it's not to say that the Fed's going to stop raising interest rates, but they're not going to be raising them as fast as anticipated, which would give growth a little more room to breathe and grow a little bit. I still don't think we're going to get into any true bull run rally of any sort until the Fed decides to stop raising rates altogether. So they've got to finish tightening, they've got to finish raising rates, then we can take a look and see where the market is, because I have a feeling what's going to happen is when you start to adjust things, you usually have to, you overcompensate, so you'll see it kind of going up and down, and then it goes up and down, and then your ups and downs get smaller and smaller until it kind of gets to be more of a flatter line where it's smoother. So we'll see how this transpires over the next 12 months or so, but I think that's what's going to happen. So the Fed kind of is in a place where they maybe overreacted a little bit in the hawkish manner, so now they maybe will overreact a little bit in a dovish manner, and then they go back hawkish, but not as hawkish as they were before, and then go back dovish and kind of play this game. And we've sort of seen this as the year has played out anyway. I mean, we were looking back to December and they seemed like they were kind of hawkish, and then went more hawkish in January, and then a little dovish in February and March, and then a little more hawkish in April. We've kind of seen this going forward, and I think it's going to continue, but as the drastic amounts of their flip-flopping is going to minimize until we get to a point where we're finally level. And it's not to say the Fed is wrong in doing this. They're kind of making decisions based on their information and kind of moving things in one direction or the other. And it's just the way it is. You know, I don't work in the Fed. I don't know macroeconomics anywhere near as well as they do. So I can't say whether what they're doing is right or wrong unless I'm using hindsight, which obviously hindsight's 20/20. So the decisions are what they're making, but I can see this transpiring as we play out with some ups and downs until we get to smaller ups and downs. And then we'll probably get to a point where the Fed finally stops raising rates, kind of sees where things are going, and then maybe has to adjust rates down a little bit to compensate, to kind of give the market a little boost back in the direction to get us moving forward again. That's just my prediction in the long term over the next 12 months. So we'll see how that plays out. But I definitely see the next move they're going to make is going to be a dovish move because we've seen such a hawkish Fed lately. So again, overall this week, I think we're going to see ups and downs. And truly at the end of the week, I think it's going to come down to whether the CPI is good or bad, whether it beats expectations or misses expectations. And I think whichever way we go, even though it's a Friday, is going to determine how the week overall plays out. So let's see how this week goes. Let me know in the comments below what you guys think. Do you guys think that we are going to have a green week? Are we going to have a red week? Is it going to be roller coaster week? Like I have a feeling it's going to be. Let me know your thoughts in the comments. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat if you want to join us there. That link is in the description below as well. Thank you so much. Have a great one.